Hey, Ryan here with Forever Florida Real Estate. Just doing a quick analysis of this upcoming listing we have. It's currently an Airbnb listing about 9 or 10 minutes from the beach in South Pasadena. It's actually an unincorporated St. Pete, but it's right over there by South Pasadena. Now, here's our rental property calculator, and this property is going to be listed actually around $350,000. And I'm going to assume a monthly rent of $1,900. It might be a little more. It's a 2-1, but it's got kind of an extra room, and it's just in a really cool spot. Really tidy house. Again, currently operating as a turnkey Airbnb. So I'm going to use the annual rental amount as if it was a year round, and we're going to ignore the Airbnb numbers to start, and then I'm going to plug in the Airbnb numbers. So a down payment of 15%. This would be on a DSCR loan, investor loan, with an interest rate of 8% for those loans right now, 30-year term, and I just have some other numbers here that you can see that roughly mirror where you'll come out. So if I click calculate, you can see here that the monthly cash flow in the first year is going to be a negative $991. Now that does not sound fun at all, right? So at this purchase price, over the 20 years, you're only looking at an internal rate of return of 4.6, which kind of is where just buying kind of a bond or a T-bill or whatever is at right now, which is kind of interesting. But you know, if you hold it for 20 years, it's just real estate. You do get a nice after 20 whole years, if you can stomach that, you do get a nice 318% rate on rate return. And just know that in this calculation built in on the previous screen, we are accounting for value appreciation, the cost to sell, the vacancy rate, management, a 10% management fee, etc. So not super exciting, but truth is, that's kind of where real estate's at right now. We're pretty high. You're not going to get that 1% of the monthly rent number that you used to be able to get. A lot of investors use a rule of thumb like, hey, I want the monthly rent to be 1% of the purchase price. Well, in this case, that would be $190,000 versus a $350,000. Now, this property is actually doing about 100 a night, a little over 100 a night on Airbnb. So let's just play around and just say that it was, just for argument's sake, that for now it's doing $3,000 a month, which is kind of where it's around. Of course, that fluctuates, with season here in St. Pete. Let's see how the numbers look there. So it starts to look a little better. You're almost at break even cash flow wise, and then you get a nice little 13% internal rate of return year over year. So a little more exciting. Now, what I like about using tools like this is, you can quickly, this took me about 2 minutes to put together, without recording the video. You can quickly say, well, I don't love the property at $350K, but maybe I'll make an offer because I like the location, I like the property itself. I know it's got a great tenant pool, it's got long-term, and maybe the seller is just being too aggressive here. What happens if we can pick this up at $315? What do the numbers look like? And you can start to play with those using the calculator. And of course, the numbers look better because you're purchasing it a little lower. You've got some monthly cash flow, and things are a little rosier. So I'm not saying that I recommend this property for an investor at these numbers. It's going to vary, based on your situation, of course. Maybe you're excited about, you don't mind the negative cash flow. Maybe you're going to put a little bit more down. That's another thing we could have done here with this example. I could come back here and let's go back. I can go back and say, all right, well, let me do a 30% down payment. We'll go back to that conservative estimate of $1,900 a month on the annual. It's probably more like $2,200, but I'm being conservative here. And then the numbers don't look as bad as they did if I'm putting more down. So a calculator like this could also help you figure out if you're sitting on a bunch of cash, like, okay, maybe I'll put 50% down. Then it looks a little better. Or maybe I'll buy the property cash, right? Maybe you cashed out the stock market, you think the stock market's at the top, and you cashed out some of those gains, and you want to put it in something that's a little bit more of a better hedge against inflation, and then you're looking at a nice little, $1,200 a month in cash flow after the maintenance and management expenses and everything else, and a 7% a year on something, a little slice of paradise here, St. Pete real estate, which isn't going anywhere, right? And by the way, this property is far enough away from the water that the flood insurance and hurricanes probably aren't going to hurt you much or be much to worry about right here. Don't hold me to that. You never know what will happen. But anyway, if you want more analysis like this on a specific property that you're thinking about buying in St. Pete, or if you'd like to just be notified when I do more of these kinds of analysis, just click the link or the button somewhere nearby. I'll also include a phone number you can text if you want to. Thanks a lot for watching this investment property analysis here from Forever Florida Real Estate.